to the back, ayy. Got the foot on the gas, pedal to the metal when the lane moving fast, ayy, ayy. Let them all cross. If they hate, then let them hate and make a bigger boss, ayy.
This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak with transportation professionals because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Friday, everybody. I got a very special guest for you guys here today. We're just going to be breaking down market insights, all right? Trends, opportunities, what is actually going on out there. Again, you guys, this guy, he's been on the show in the past, but, you know, he actually moves freight. He actually develops business just like I do. And we're just going to kind of compare notes. How are we assessing what's going on, where things are trending? But most importantly, how do we kind of have a better understanding about what all of this data means and how you guys who are watching and listening can apply this into your business? So I have my good friend Cody with A&Z Trucking back on the show today. Cody, thank you so much for taking the time to join me.
No problem. Always a pleasure to jump on, buddy.
No, I appreciate it, man. Corey Buchan, happy Friday. Jim Davis, good morning as well out there over on YouTube, you guys. And again, we're really trying to push everybody over to YouTube because they allow me to speak more freely on their platform than other platforms that my show is on. So we will continue to go in and jump in. But dude, what's going on, man? There's been like 87,000 headlines that have came out here in the last couple of weeks. And, you know, there's so many overtly bold predictions and some that are just so categorically false going on out there. Like, I understand why there's so much like kind of constant panic that's going on like where things are. And, you know, so it's like, I wanted to bring you on today because I mean, I just did a show on this the other day, you know, because I'm really trying to do like a once a week, take the freight data that's out there that's available and just kind of show people like, this is how I read what's going on in my business. This is how I think things are trending, and like some of those key data points that people can look at and really bring just some calmness to like where things are, because it's never as volatile as social media and the media ever wants to make it out to be. There's so many like seasonalities and so many data points that you can point to and be like, oh, that happens every year because of that event and everything else. So like, how are you approaching like right now? We'll start last week with it being Thanksgiving and kind of like some of the data points that you saw.
Well, I mean, bottom line is data's king, right? But garbage in, garbage out, right? So anybody can make the data look however they want to. But I think the biggest thing is to understand freight is always cyclical. You can kind of set your watch to a lot of things that are going to happen every single year. Last week was, I mean, if it caught anybody off guard, you probably haven't been moving freight for very long. Mm-hmm. This week, obviously, we got some weather that's really happening. Q4 and Q1 is always kind of dependent on weather, right? If you have a really tame winter from a snow perspective, then freight's pretty easy to move, quite frankly, because it's people are, especially Q1, because people are kind of recovering from the holidays. So spending's not really there. I think core inflation just got released this morning. It was only 2.8 or something like that. It was a normal Thanksgiving for us. We move a lot of produce. We're all mostly food and bev. So it's a big holiday for us. The big push for us is always the 2 weeks before Thanksgiving, right? Because the product's got to get into the store before the ads usually break. And for Thanksgiving's a Thursday holiday, those ads are usually like Monday, Tuesday. Mm-hmm. So we've got to have our product in usually like 3 or 4 days before the weekend before the holiday or something like that. So the previous 2 weeks were just balls to the wall for us. I mean, we were moving a ton of product. Thanksgiving week is always slow when it comes to food and bev because mostly what people need to buy has already been in the distribution center. It's already to the store. So it's kind of a slow week for us. That's typical. And December's acting like December right now so far. I mean, it's kind of slow out there, but you've got a big weather disruption going on, and we're definitely feeling that. But it's not doom and gloom. I mean, I don't know. I think outside of hurricanes, like the worst weather, you were moving freight when this happened too. Remember that Texas freeze that happened in like 21 or whatever that was, like basically froze half the country. That was like a very sustained weather pattern because of the effects that it had. It put out a lot of drivers out of commission. Outside of that, like, it's just blips on the radar, man. You and I talk a lot. We text a lot back and forth on just what we're seeing out there and just life in general. And, like I had mentioned earlier, it's like 90% of your bad thoughts and negative thoughts never come true.
Yeah.
And I think that the more you read into some of the things on social media, the more those thoughts tend to multiply. And unfortunately, just stick to the data, stick to your guns. Like, especially if you're newer and you haven't gone through season after season like you and I have, stick to the data, find some good people to listen to. Not everybody's ever going to be right. I love, obviously the DAT guys put out a lot of great information. Dean and I are really good friends. We talk quite a bit. There was an interesting one that they put out, I think it was yesterday or the day before, about corrugated boxes being super down right now. Very low demand for corrugated boxes. And that's a microeconomic indicator that it's going to be slow for Q1.
Yeah.
Think about everything that we buy or everything that you touch during the day. Most of it has some sort of cardboard box that it's shipped in.
That's true.
So if that's down, like, that's a good indicator of what's going to come next. So we tend to focus on the micro scale of everything because those are what's really going to kind of help you predict what's going to happen. The headlines don't. I mean, the headlines mostly are just clickbait and bullshit, right?
Yeah. No, dude, I agree. And it's like I look at a lot. I think one of the biggest mistakes a lot of individuals make when they're reading anything about the market is when they only pay attention to the national average. And if they're like, so like this week, I get a weekly market report, from a couple of different data sources. But, if we're looking at the national average out there, dry van was $2.15 a mile, flatbed was $3.25 a mile, and refrigerated freight was $2.45 a mile. Now, the week over week change from a percentage point, 1.2% for dry van, 0.8% for flatbed, and then 1% for reefer. So, again, I'm trying to look at a lot of these things, and because you could take that and then you could make the pricing mistake of going out there and then bidding on something and being completely off base because you're using a national average, or you're not factoring in that, you brought up the snowstorm out there in the Midwest, right? Like, dude, I was talking to a couple other buddies of mine who were moving freight between Nebraska and Indiana, and they were like, bro, it like quadrupled overnight for the rates on that. And again, I'm like, you got to point to the weather pattern that's out there. But the mistake that people like, dude, we're here in Arizona, bro. Like it's cold out, but like if you're bidding freight in the Midwest, your first inclination isn't, I should pull up the weather and see if there's any storms going on out there. But then a mistake that some individuals make is they go to the national average and they're like, oh, reefer's moving for $2.45 a mile. Boom, I'm going to bid that. And then they miss the fact that there's a snowstorm going on in that exact same lane. Capacity is going to be non-existent. And then if the guys are going to move it, they're going to be charging a premium for it, right? So it's like, it's those little micro factors that need to go in and take into play. And especially if you're going to be operating in a run and gun spot market style of book of business, which like most people won't ever admit it, but that's like 90% of the freight that's out there. That's how a lot of people are moving it. It's all spot market. The majority of it is last minute, and then a lot of it's truck in hand.
Yep. Yeah, it's I don't know, it's tough. Like we move a lot out of North Dakota, which is funny because there's just not a lot coming out of North Dakota. But this week, I mean, we saw rates double and triple out of there. We're losing money hand over fist, but it's part of being a broker, right? You got a year-long contract to move out of there. You take the good with the bad, but you go into the week knowing that you've got to watch your weather, you've got to watch your capacity. And to your point, I read a post this morning about somebody complaining about, oh, F these brokers because they're not willing to even come up to $1.20 coming out of Florida right now. And I'm like, yeah, have you ever been to Florida? Like outbound Florida, you have like a 3-month period where you can make money out of there. Other than that, you're deadheading it north, or you're just taking fuel money. That's all it is, right? Like, people don't understand that, a national average is 48 states, man. Like that's that's a pretty big average. That's a lot of freight to average out. And to your point, if you're not looking at the regional portion of it, you're going to get burned one way or the other, either going to Florida thinking you're going to get $2 coming out, or going to, bidding on freight that's coming out of the Midwest right now and thinking you're going to cover it for, $2 a mile, which is just, it's capacity, like weather is such a factor for, I don't know, probably 4 months out of the year, right? Like a major factor. I was reminiscing with some of my team actually the other day about, I've been on the brokerage side for almost 8 years now. I've paid $20,000 for a truck one time. Yeah. And it was when it was out of Washington, because anybody who moves freight out of Washington in Q4 knows how bad it is. But massive snowstorm came through that pass. Like I can't remember how to pronounce
that pass's name. Was that 2016 by chance?
No, this was this was like 21 or 22.
Okay.
So it was a few years ago, but not too bad. But basically, so we hopped on DAT. There was 500 and something loads posted, and there was 3 trucks that made it over the pass before they closed it.
Oh, damn.
So 500 to 3 ratio was pretty bad. But I had a customer who literally was like, I don't care what you have to pay for this truck. It has to get to Maine, right? It has to get to Maine, get it loaded. I paid $20,000 for a one pick, one drop from Yakima, Washington to Maine.
Jeez.
And but that's what, that's brokering. And but it's understanding and talking with that customer and say, look, this is what we're up against, guys. Like the trucks can't get into this area. And it's just, I don't know, like brokering's fun, but it's also, there's those days that, I shaved my head because I wouldn't have any hair. I'd pull it all out if I had any hair. So like, it's fun, but to answer, I know we got off a little bit on a tangent there, but like to answer your question, pay attention to the microeconomics of everything, guys. Yeah. Like pay attention to inflation data, pay attention to interest rates. I talk about that all the time. I think that interest rates are going to be the only factor that's going to cause this freight recession to be over finally.
Yeah.
I don't think people are spending money. They're just consumer sentiment's not great. If you look at the dollars spent for Black Friday, they were high, but the cases moved were not as high. So basically, they're moving higher dollar items, but less items than they have been in the past. So that equates to less freight. It's not about the dollars when, retail dollars for us. It's about cases moved, right? It's about tonnage.
No, so, I agree with all of that, right? And so it's like I'm looking at you mentioned North Dakota, so I pulled up Fargo, North Dakota to St. Louis, Missouri reefer here, and it's like you're looking out, and I see stability at the end of the day. Like if I'm looking at the last 90 days, the market average has 24.87 is the market average on DAT right now for a reefer from Fargo to St. Louis. And 24.87, so round up $2,500. There was a spike to $2,700, it looks like here, but then it has now since dropped back down into that $2,500 mark. So again, it's like if you're going out there, and I guarantee within that data spike out, it had probably everything to do with Thanksgiving, and there would be a weather event that would come along with it. Because again, if you look out at the 1 year mark, it's been as low as 2,300. But again, it's like when you're out there and you're brokering and you have that contracted rate that you're talking about, there's going to be those times where it's like you have to go in there, you have to eat that, and you have to service the account, because it's like, again, nobody complains when they're making their 15% or 18% margin or whatever it is that they're making on their freight. But it's like you can't give those loads back. You cannot under anything. But again, it's like it's a short-term pain. okay, so you got to break even or lose a little bit of money here for a couple of weeks for whatever reason. You have to do that. That is the expectation from your customers, because again, they know you make money on their freight, but you can't just go back and ask for more money, because it's not that's just not it's not sustainable for you to do that. They might approve it that one time, but they're not going to want to continue to approve that. And then there's going to be another provider that comes in and offers them that stability, that views it as a true 12-month partnership.
100%. I mean, we like just this week, we had one of our largest customers hit me up and say, hey, this carrier can't take these 3 lanes anymore for the next 6 weeks. Can you service it at this rate? And I said, yep. And he's like, cool. So he awarded it to me through September of next year. Yeah. And it's because, like, I get it. There's a lot of people that just want to win the freight and then deal with the consequences later. And I think that's just not the right way to do things. Like, you have to be prepared for the good times as well as the bad times. There's always a puke point, right? That's always what, from an accounting term, your puke points when you've lost enough money where you're going to throw up. And you have to set that puke point, and when you reach that, you do have to make a decision, but you need to go into an RFP understanding that you shouldn't be bidding to where you're going to come close to that puke point. You gotta, we, like I mentioned, we move a lot of produce to Pacific Northwest California. They're both very, very swingy areas, right? Depending on the volume that's coming out of there. And Pacific Northwest, for example, we just chalk up to like Q4. You just don't make money in Q4. You just can't. It just, you got to service the account. Customers need their apples and their onions and their potatoes in Q4 just as much as they need them in July when you're making money off of it. Yeah. So you just got to go into it prepared for that and have that relationship with your carriers. If it spikes $2,000 for a week because of weather, have a good enough relationship with your carriers to where you're going to pay them $1,000 more instead of $2,000, right? They're still going to make their money. You're going to take care of your carriers, but they're not going to bend you over if you're just going out to the spot board and working with a random carrier that you're never going to talk to again.
How are you guys? You guys are heavy in the state of California, and I know the state of California is always seemingly under fire, but like recently, especially with a lot of the fraudulent CDLs, and there's a lot of stuff coming on out there. How has that affected capacity? And then, like, how are you guys approaching, onboarding, vetting drivers and everything here moving forward? Is there and then, second part of the question is have you seen any increase from your shippers, like, hey, are these guys compliant? Can they speak English? Is that reached down to your level, especially in the state of California?
Second part of that, no, we actually have not had anybody, bring up the English speaking issue out there. But we are very, very strict with the carriers that we work with. We haven't seen really a decrease in capacity out of California. Part of that is because freight has been very depressed out of there. Dean brought this up on his last show. California produce is down 16% year over year. So when they're losing volume, obviously that's going to offset some of the capacity. We know that capacity has been lost out of that state. We are noticing, though, out of California, a lot of those drivers are not wanting to go to Texas and Florida. A lot of those drivers have not moved down to Yuma yet. They should have already, but a lot of them are avoiding anything that's close to the border. And it's not that these guys are illegal by any means. It's that they just don't want to get harassed. They don't want to get stopped for 2 or 3 hours and have to show their identification. I don't actually know what even goes on through those stops, but they're just avoiding some of those states that they're going to lose 2 or 3 hours every trip. So we haven't really seen that, but from an onboarding perspective, we're very, very strict about the carriers that we onboard. They've got to have a certain length of time. We don't onboard anybody that's not been in business for at least a year. We go through a very strict vetting process through both highway and carrier. Sure. Big shout out to Cassandra over there. And then we do quarterly updates with highway as well, like to make sure that everything's compliant through those guys every 3 weeks or every 3 months. So we haven't really seen too much of that. And a huge shout out to Parade. I don't know if you know those guys very well over there, but they've got a great system with their I can't even remember what it's called, co-driver, that actually filters out all that stuff. So we probably do have a lot of bad actors that are inquiring about our loads, but we don't ever even see them anymore. Mm-hmm. That all gets filtered out through their AI process. So I couldn't really talk to that much. We don't really have too many that are actually getting through to actually talk to our reps in real life, knock on wood. But You know, you got to utilize the tools that are out there. I feel bad for the guys who are, you know, 1 or 2 man operations that don't have the ability to do that, because I guarantee you they're getting bombarded with fraud, because we all know anytime that there's any kind of capacity crunch, even if it's short-lived, like weather or a holiday, those guys come out in full force.
Yeah. Oh no, I agree on that. How much do you think this could potentially affect the capacity here moving forward with it? I mean, I've put my opinion out there enough, but like I'd love to get your stance on this, because I think that depending on how hard Duffy wants to go with this, and by all indications, they're going to go really hard with this here.
Mm-hmm.
How much do you think has actually slipped through the cracks where this is really going on? Do you think that this could have any like seismic capacity reduction over a short period of time?
No, I really don't. I think that the effects that we've already felt have probably, you know, already baked into the capacity that we have out there right now. I think that honestly, it's going to take a major weather event or a major anomaly like a war or something like that we can't see. Or naturally, just as soon as interest rates come down to a point where the economy strengthens. I mean, it's, you know, inflation numbers are great to look at, stock market's great to look at, but it's not a real indicator of what is really going on out there, right? So I just feel like consumer sentiment's not high enough that capacity is going to be affected from a demand standpoint. I think that the demand keeps shrinking and shrinking, you know, be it a little bit less than it was 2 years ago, for example, right? We're not shrinking at the same pace that we were, but it's still either shrinking or flat. And I've got a very good friend who's a VP over at Great Dane Trailers. And I was talking to him a couple of weeks ago about demand, because they usually have build dates that are, I think it's like 6 to 9 months out. And he still has, towards the end of the year, build dates for Q1 and Q2 open slots. That doesn't happen.
Yeah.
So that tells me right there that the demand's just not there. And we're such a cyclical environment. As soon as there's enough demand and the capacity gets small, more drivers will enter. It happens every time, right? If there's a demand, they'll find a way to fill those driver seats. It happens every time. Doesn't matter if it happens in 3 months or 3 years, it will happen. So I think that we're just waiting for that next cycle. I honestly do think that next cycle is going to be a slow creep, though. It's not going to be a 2018 with the ELDs or a COVID type event. Hopefully, knock on wood, we don't see that again. But I think it'll be a slow creep. I think we'll see spot rates and contract rates finally invert, and then I think it's going to be a quarter or two for them to stabilize, in my opinion. But
yeah, I look at it is I don't know if there's going to be, because like I agree with you on like the ELP and everything. I think it's great that they are doing what they're doing, because like I think at the end of the day, we want everybody who's operating heavy equipment to be able to actually read and understand the road signs that are out there.
Yep.
But again, I feel like it's very sensationalized at times on like how bad they think it is compared to the actual result of where, you know, where it is, you know, as a whole. And, you know, I look at that, but like, I see it as capacity is not going to leave at the, like, if they're already figuring out a way to make it work now, the legitimate guys, they're going to continue to figure it out here. And there's like, if anything, they would go and drive for a mega fleet for a year 100%. Until it happens, and then they'll jump back in. I just don't think that we'll see, unless like the one thing I am paying attention to a lot here is the ELD self-certification. And if this is going to cause a massive upheaval to where there's only a couple of providers that are like actually certified out there, because you're seeing that with some of the onboarding software is they're not allowing companies who use certain ELD providers to even operate, like get set up anymore. Right. So like you can go out there and do that. I think that might be a thing as well that could potentially pose a risk out there. And again, like, I'm just like, you know, my whole thing is with a lot of this stuff, Cody, is I want standards, and I want everybody to have to adhere to those standards. I don't want any loophole, and it's hard, you know, to actually have that in our political environment. I don't want any loophole available to anybody to side skirt the issues or to side skirt the laws at all. Like, I want everybody held to the exact same standards. Like, for me as a business owner, I want everybody, like I'm a capitalist when it boils down to it through and through, but I want everybody to be held to the exact same standards that I am as a business owner. And I don't want any loopholes that are out there. I don't want people to be able to come in and have a certain visa that isn't actually the right visa to have, and then they're out there operating. I don't want that, man, because it's like, if I can't fucking take advantage of that as a tax-paying citizen here, I don't want anybody to be able to do that.
Yeah, agreed. And also, I mean, just from a safety standpoint, right? If you can't read and write English, and you can't understand the exit signs, and you can't understand all of that stuff, that's a major safety concern. Not to single out anybody, but like that's a huge thing, right? Like, I mean, Cody, you're driving a 120,000 pound, missile down the road. So,
and I've even said this, man, if it's truly about safety and it's truly about making sure everybody can read and speak English, and especially read, because that's the big emphasis that's out there. And I've said this, I'm like, I truly think that the Department of Transportation should pause the issuance of any CDL for whether it's 6 months or a year, and they should make everybody go through it to recertify that they can read and speak English, every single active CDL, because I feel like that's the only way that they could ever remove any like prejudice or profiling that comes along with it. I think even if you're American born, because again, if you were born in America and you're illiterate, I don't want you driving trucks either. If it's truly about that, if you cannot read, I don't want you doing that. And again, it's like, that's the standard that has to be set. That's the way it should be. Again, I don't want any loopholes.
Just make it part of the medical card process, right? Because you got to every year they got to go make sure that they don't have diabetes, or all the things that they got to make sure that they're safe behind the wheel and they're not just going to collapse driving 75 down the road. Make it part of the medical card process. Make it a requirement. No,
I agree, man.
Tons of things, but I think it's all good stuff though, right? Because there's fraud everywhere, and anything we can do to tighten it up a little bit to make sure that the legitimate guys have a fighting chance. Let's do it, because I think we're all capitalists at heart. So most of us are anyways. And all capitalists want is just a shot, right? Yeah. We don't want handouts. We just want a shot. We just want a level playing field.
I'm right there with you, man. And that's my whole thing, right? Like I look at it is the way that the DOT is taking things right now. I'm a fan of. Because I guess for me, I'm a legitimate business owner. Like, I could prove everything today, right? Like, I have everything saved on my computer. If the FBI or whoever kicked down my door right now, it's just one click. Here's my stuff. I'm legal, and here's my operation. And I feel like, and I said this the other day, I'm like, if the trucking companies that are out here that are doing everything by the book, they're going to break over the next couple of years, because if they continue to go hard with this, man, which I think that they will, I truly think that, it's going to be annoying. All right. And I'm not sitting here saying anything that I'm saying is going to be fine. It's going to be annoying, and it's probably going to piss you off. But I look at it as if you're out there doing the right thing, you're operating the way that you should, you're following the laws, you're doing it by the book. I truly think this could be a massive, massive opportunity for those companies over the next 5 years. I really do. Because I think that they are going to go even harder than they currently are. And they're not going to slow down with this. And again, if you're doing it the right way, and anything that comes down the pipe from DC, and you're a legitimate trucking company owner or freight brokerage, and you own that, and if you have to go through a little bit of additional screening right now, that's only going to benefit you. It truly is, or especially over the next 5 years.
Yeah. If there's a demand and there's money to be made, there's going to be people who understand how to make that money, right? And you're right. I think that the legitimate companies that are doing, even I noticed this week, it's the driving schools that they're trying to crack down on, right? That there's a huge demand for that. So if they close down 50 driving schools that aren't doing things legitimately, in the next 6 months, there's going to be 50 that pop up that are legitimate, because there's a demand for it. There's money to be made. So I think that we'll be okay from a capacity standpoint. It's just going to tighten it up, and it's going to get people to play by the rules a little bit more than they have in the past. But
that's all we need, though.
What about that headline? So they're changing security bonds or something for brokers in January, right? Like I think that rule right now is you got to maintain at least a $75,000 security bond, right? But now they're actually saying that in order to start a brokerage, you have to have money to back that security bond up instead of just being able to go out and get one. And I keep reading articles about that saying, oh my gosh, this is going to, drive the broker population down, because instead of having all these brokers just being able to pop up all over the place, it's going to severely limit them. I haven't read too much into it, though. I was wondering if you knew much about it.
It looks like it's still at 75,000.
But now they actually have to have liquid assets to back it up. That's what changed. So now instead of just going out and buying a security bond from somebody and paying your monthly dues for it, you have to have cash, or I can't remember what it was, cash or bonds or something like that, to actually show that you have that 75 grand to back it up.
Oh, okay. Yeah. So what it is as of January 16th of 2026, it's still $75,000. But if there is any drawdown or claim against it, say it's, for simple math, it's $5,000, then your bond dips to 70,000 at that time. You have 7 business days to replenish those funds to get it back up to $75,000 is what it looks like. And then that is for brokers using the trust fund option BMC, Boy Michael Charlie -85. The pool of acceptable trustees and trust assets has been narrowed. Only federally regulated banks and credit unions can serve as trustees, and assets must be cash, U.S. Treasury securities, or letters of credit, liquid convertible within 7 days. And then many existing trust arrangements, roughly 90%, are expected to become non-compliant under the new requirements here. So that could be a big deal. It's not going up, but you have to have the actual cash money in the bank.
And I think that will mostly impact newer brokerages, right? Obviously, like if you're an established brokerage, you most likely have the funds to do that. But it's going to make it a lot harder for these guys to go pop up, which in turn is probably just going to drive more of the agent model, which I don't know about you, but I cannot scroll through my LinkedIn without seeing somebody preach about agent model every 3 messages that I see.
95% of the posts on my LinkedIn right now are about agents.
Not dogging that. I know you're an agent. We got agents that work for us. I'm not dogging that whatsoever. It's just, I think that's going to push a lot more people to that. Just because it sounds like it's going to make it harder for people to go start a brokerage.
I am a fan of that.
Me too.
Again. And from my perspective, we need to change it up, and we got to make it harder out there for people, again, because it's like, you shouldn't be able to go in and just like pop up. You know what I mean? Like there should be a way, and anything to make it more capital intensive out there in the market is a good thing. It really is. Yep. And I want to see that happen. I want to see higher standards and stuff out there. But
me too. It protects the carriers long term too, right? Like, because you don't want to see those brokerages pop up and within 90 days just find out that they're fraudulent, and $75,000 worth of loads that carriers took for those guys, they're just never going to get paid on. Like, that's just not good. So
dude, that's exactly it, right? The standards are a good thing, whether it's with the brokers or with the carriers and everything else. I mean, there has to be standards. There has to be high standards that go on, and we need to have that happen. So, dude, I appreciate your time today, man. How does anybody reach out to you to find out more?
LinkedIn's the easiest way to find me. Also, anztrucking.com. You can hop on there and email me directly from there. But LinkedIn is usually the best.
Dude, I appreciate it, man. Cody, thank you so much. If you guys can't find Cody out there, hit me up. I will gladly put you guys in contact with him. But that is going to be it for today, ladies and gentlemen. As always, if you got value in what you heard and you're not subscribed, subscribe to the show. And if you're feeling ambitious, rank it on iTunes and Spotify, because if you see value, your network's going to see it as well. I appreciate you guys. I love you guys. And we'll be talking to you soon.
Came back with a bang. Window down, yelling out money, anything. Hey, ooh.